How to accurately trade earnings. My name is Don Kaufman with Theo Trade. Here is a risk disclosure. We are not financial advisors nor a broker-dealer. I pulled this up over here because I spent the previous portion of my career in the brokerage business. We also have a copyright disclaimer. This is ours. This is not yours. I also throw this up here because I want you to know after this evening, if you need to get a hold of us, this is where to get a hold of me, anybody. We use a common inbox here at Theo Trade. So you go to support@theotrade.com. This is also our 800 number. And of course, we have our offices located here in Scottsdale, Arizona. Next, this is a little bit about me. I'm the co-founder here of Theo Trade. I started in the trading business in the late 90s, only days out of college. But in all fairness, people always ask like how I got involved in the business, right? I had family in the business, and about just a few weeks out of college, they said, somebody quit. Why don't you come here? You can clerk to begin with in Chicago. Anyway, went to Chicago, had no idea what to expect. If you put a 22-year-old kid in a trading floor situation, they're never leaving. So here I am 21 years later, but about 2 years after I started trading, I was invited to a startup brokerage firm. That brokerage firm just so happened to be called Thinkorswim. So I started this firm that had a handful of people. There was 11 people or so when I started at Thinkorswim. We built that firm to 730 people. I built the education side of it. Then we were eventually acquired by TD Ameritrade. I was there when we took the company public. Pretty much soup to nuts was at Thinkorswim. And then I went on to run education for TD Ameritrade for 5 years before eventually hanging it up. I'd had it with the regulators, and we launched Theo Trade. And actually several of the people that worked in my group at TD Ameritrade, well, they're right here. They're at Theo Trade now. So that's a little bit about my background. This is CNBC tour. If you want memorable portions of your career, it's nice to be pitted against somebody like Kevin O'Leary. By the way, I know this ruins it for everybody, but the guy couldn't be nicer. I got to talk to him for about a good 15, 20 minutes prior to the interview. We were just sitting in, dark rooms. So you talk to somebody, couldn't be a nicer guy, really couldn't be a nicer guy. Although we got into it in this particular interview. Let's talk a little bit about Theo Trade because, how many people here are brand new? You've never been to a Theo Trade presentation before. I think it's a fair question. By the way, if you're watching this on a recorded session, you can answer the screen. Nobody cares. You're like, I've never listened to this before. So, by the way, these are not rhetorical questions. Come in here anytime and say anything. I'm reading it. All right. So, again, how many people are brand new? You've never really entertained anything here at Theo Trade, so you have absolutely no idea what you're in store for. Right. This is what Theo Trade is about. We specialize in education for stocks, options, and futures. We're founded by professional traders. Okay. And trading educators. Everybody here has a minimum of 15 years of experience. That is trading experience. A couple of us have a few decades under our belt. I'm a decade in a year, right? No, I'm 2 decades in a year, 21 years now. And we launched Theo Trade. We talked extensively about this. We're here first and foremost to help you mitigate the risks in the market. And you're going to learn a skill set that can last a lifetime. Tonight, this stuff is going to be essential. Next, I want to introduce you to the TheoTrade Instructors. And the reason I want to introduce you to some of the TheoTrade Instructors is it's important for you to understand that this is not, like a one-trick pony. I know there's a million education companies out there like, you got this guy, and they open up. Listen, we have 7 full-time instructors that are unrivaled in their genres of trading. So these are the TheoTrade Instructors. Jeff Bierman worked with me at both Thinkorswim and TD Ameritrade. He's also the former chief market technician for TD Ameritrade. If you've ever been on the Thinkorswim charts, you should thank Jeff Bierman because a lot of those studies came from his mind. Next, Matt Williamson. He's actually a market-neutral premium selling strategist. Want to know how I found Matt? Okay, I actually found Matt because he was one of the larger traders that ever traded. Okay, through Thinkorswim and TD Ameritrade, and his name used to come up all the time while I worked there. So when I left and started Theo Trade, we gave him a call and said, hey, listen, I know you trade. You interested in actually teaching about it? Never taught anything in his life until we actually hired him. Next, Corey Rosenblum. I had met Corey over the years, senior strategist and our resident swing trader. Next on the list, Brandon Chapman. So Brandon also worked with me at at TD Ameritrade and even before that. In fact, Brandon helped write the course material for all the education at TD Ameritrade. Brandon and I put together a couple of the courses at TD Ameritrade. Stuff is still used today, so you can imagine how much content he is familiar with. But Brandon's specialty, macroeconomics, technicals, fundamentals. Then we come to Steve Slim Miller. It's a 43-year veteran stocks options futures trader. Steve is just unrivaled in terms of time in the industry and really skill set in cyclical trading, if you're familiar with cyclical trading. Last but definitely not least, we come to Tony Rago. He's our NASDAQ futures and intraday strategist. What is he? He's the guy that trades all day, every day, live. With that, are you willing to put forward some of the effort, right? So I need everybody to understand right now, right up front, what we're going to discuss tonight, the course material. This is going to be a little bit demanding to learn, okay? This course is not going to be, and I'm going to read this verbatim, this is not going to be some chart pattern. This is not going to be what I call following the bouncing ball with green and red flashing lights. Like, I hope everybody is through all the garbage in this industry, right? You know, it's getting so ridiculous because people don't even realize, like, hey, I did research and I found this. I mean, come on. Are we still looking at like red and green flashing lights to pick direction of the marketplace? If you really want to learn this business, okay, you got to be putting forth effort. This is not going to be instant coffee, instant tea. This is a skill set that I'm going to talk about tonight based on statistical data. And a lot of people, as soon as they turn in, they're like, that kind of turns me off. Like, is he saying that I'm actually going to have to learn something? Yes. Okay. I'm sorry, but you're not going to turn on the machine and be like, is this thing going to print money for me? No, you have to learn something, okay, in order to be effective in this business. What we're about to discuss, it involves market makers. It involves hedging activity, okay, and the will to learn. Ready? Everybody good? Good? All right? Just making sure. Because if you're not, like, this is the point where everybody's like, that's it. I'm out. I'm out of the contest. No, you know, you got to be willing to put forth a little bit of effort in this. We're going to start with a bit of a recap on what I term getting to know expected move. Again, I warn you, stuff's a little bit demanding this evening. Getting to know expected move. Volatility is equivalency to risk. Now, right off the bat, we're talking about options markets, okay? Understanding option markets can be rather essential. Now, I am not suggesting, because I know some people want to trade futures and I want to trade Forex, I want to trade this, I want to trade that, I want to trade stocks. Okay, listen. The options marketplace, an understanding of volatility and risk. I am not saying that you're going to have to necessarily trade options. What I am saying is that the option markets can be absolutely vital in your understanding of what a stock can do. And that's where, like, people don't really get this, and you will momentarily. So just, you know, when some people hear options, they're like, that's it, I'm out. Listen, option markets, they can be thought of putting as a price tag on risk. That's what they are. Option markets are a price tag on risk. Pricing in markets is determined via market participants. What I'm saying is ultimately that option pricing comes down to supply and demand. And competition breeds efficiency in pricing. And you're like, what? And by the way, I like to do a lot of examples, examples. And, when I say a marketplace, what's a market? It's a bid and an ask. If something is trading $1.50, okay, at, we'll say, $1.52, what does that really mean? Okay, it's a price somebody's willing to buy at, okay, and a price somebody's willing to sell at, period. Okay, and the more competition there is, all right, the more efficient this market becomes. This is a 2-penny wide market. Now, this could be a market on a stock. This could be a market on an option. This could be a market on the Forex, okay? But you have to understand, even options, in the end, they come down to supply and demand. If everybody demands an option, if everybody demands it, what happens to the price? Anybody? What happens to the price if everybody demands this $1.52 option? Okay? The price goes up. The price is simply going to go up. It's going to rise, right? Okay. Well, supply and demand in the options market isn't called supply and demand. It's called volatility. Volatility is the same as risk. All right, the volatility component of an option, that's what really prices options, volatility. Just think of it as supply and demand. If everybody wants this option, woohoo, the price goes up. Okay, people don't really want the option, the price goes down. Remember that. Okay, and the more people that are involved in a market, when I say the more people, okay, when there's market makers, everyone's like, the market makers, they're evil. They're a server now, right? How evil is the server? You're a very bad server. You've been a bad Sun server your whole life, right? Sun servers, they're kind of gone now, but it's a bad Oracle server. Anyway, the more people competing, the more efficient things become. Now, what does this really amount to? Implied volatility and expected price moves. What does volatility really delineate? Like, what can you do with volatility, right? And how can I use implied volatility in my day-to-day trading? That's, okay, well, what we're going to do is we're going to take this volatility. We're going to take this volatility and we're going to extrapolate. It's a big word, okay? We're going to extrapolate volatility into what's termed expected move. Now, okay, we're just going through some broader definitions over here. And I told you, this is where kind of the rubber meets the road. People are like, I don't like it, okay? Let's talk a little bit about implied volatility. Now, this is a slide that I have used just 100 times over. Here we have a stock, okay? And the stock is trading right smack at $100, right? It has a volatility of 20%. Now, when you look at roughly any major stock, you can look at the options markets. And the options markets on those stocks are going to have volatilities associated with them. Here is a volatility. This one says 20%, or you could think of the VIX as like 20%, right? So what does that 20% really mean? Like, when it comes down to it, what does it mean? What does the 20% volatility mean? And what does it mean for this stock? See, that's the thing, is there's so many people are trading in the markets, okay? And be honest, again, we're all individuals in here. Nobody can read anybody else's comments except me, right? How many people have honestly never looked at an option before? I think that's fair. I mean, listen, there's almost 1,000 people tuned in live right now. How many people here have never, ever looked at an option? By the way, it's dead silent right now, right? This is where I'm supposed to say, come on, people. Admitting it is the first step. Admitting it is the first step, right? Okay. So by that, one person has come in right now. Out of literally almost 1,000, one person's come in and said, I've never looked at an option before. Literally. All right. That's it. Okay. A couple people are coming in like, I only trade options. I only trade options. Just making sure. All right. So, by the way, how many people have looked at options? Let's just go that direction, because literally only one person came in and said, I've never looked at options. I'm going to tell you why you should always look at options, even if you're not interested in trading them. Like, okay, the options marketplace, this 20% volatility, with the 20% volatility can be, what can it do for you? That's the whole thing. Like, what can it do for you? It can tell you how far this stock can move within a given period of time. I'm going to say that again. The volatility, okay, the volatility in options tells you how far the stock can move. It can be extrapolated into it. And it's called expected move. And that's what it's incredibly important, because you get people like, listen, I've been around this business for a long time. Again, I ran education at TD Ameritrade. We had 7 million clients. And I've studied 7 million clients, of which those 7 million clients, okay, well over 1.5 million of them had traded options, okay? And we've studied them all. And what's amazing, you get 1.5 million people trading options, 7 million total clients. What are the other 5 million plus even looking at for like a risk metric? So what the volatility is telling you, it's telling you how far the stock can move, and it's telling you how far the stock can move, okay? Within a given period of time. When I say a given period of time, this volatility is always set for 1 year. That volatility is set for 1 year. What it says at 20%, it says the stock can move up 20% or down 20%. Up 20% or down 20%. And it's supposed to stay in this range 68% of the time. You go, oh, 68% of the time? What happens to me the other 16% of the time here and the 16% of the time over here? And the answer is, don't worry, you're going to find out. But this volatility, it is denoting how far the stock can move, right? And you can use that for just infinite examples, okay? Now, if you know how far the stock can move for 1 year, Could you get a little cute and divide that out and figure out how far the stock can move for a month? Could you do that? Absolutely. Could you figure out then if it had a month, how far the stock could move for a day? Absolutely. Okay, for those of you that speak geek, you divide by the square root of time, right? Right? What's the square root? Square root of time. Square root of 365. Oh, it's exciting. Don't worry about math, okay? We have plenty of math geeks, I am sure, attending. That one was for the engineers. Relax, engineers. So let me explain a little bit more, again, about these expected moves, okay? Because, again, this is what the trade I'm about to show you is based on, is a little bit of expected move. So you get this stock. Whoa, my pen! My pen changed size on me there. That was awesome, okay? So it was like an ink, like a Roche blot. Here's a stock. I don't care what you want to call this stock. You can call it Apple if you want. I don't care. Let's make this a $200 stock. And this $200 stock, let's say this $200 stock's got crazy implied volatility like Tesla, right? This thing's 40% implied volatility. I mean, that thing, that stock, that means it's going to go up or down fairly substantially, okay? And that stock might be able to get all the way up to 210 or all the way down to 190, okay? So this is what we call plus or minus $10. And it's going to be able to do that within 1 day. Let's say it's able to do that in 1 day. Does that information help you? And you're like, yeah, I guess. Well, how could you use it? You could use it if you traded intraday, but maybe it's not 1 day. Maybe you figure out what the stock can move for a month. I could go on for hours about expected moves. And then inevitably, people ask me like, does the market really move in perfect deviations like this? Well, if you looked at thousands and thousands of occurrences, it's pretty accurate. But what I do want you to know about expected move, before we move on, okay, because I draw this as a perfect distribution curve, but what I do want you to know about expected move, there's no directional bias to it. It says we're going to go up 10 bucks or down 10 bucks. And I'm going to show you where to find this here momentarily. This is a tool that everybody, like I want you guys to be able to leave tonight and have something tangible, something you can actually use now in the marketplace. So here's expected move. So expected move can tell you how far the stock can move within any given period of time. You know, the further you go out in time, the more time there is for the stock to do what? To move, right? More time, more movement. That's it. Here's this $100 stock. In 30 days, it can only move in this range. In 60 days, it can move in this range. In 90 days, it can move in this range. Okay? Now, you can associate expected move and probability. Expected move defines, okay, what happens 68.3% of the time. Therefore, there's a 68.3% probability of an underlying closing inside the expected move by the designated expiration. This is total geek definitions. Don't worry about it. Okay? Breathe. This is what's important. There's an expected move calculation. Not every trading application has expected move. You want to be able, when I say you want to be able to use this, I want you to be able to leave, okay, tonight, and you would look at a trading application, whatever trading application. The trading application down below, you'll never guess. What trading application is this down below, right? So for those of you that know it, who here has no idea what trading application that happens to be? Okay? It's TOS. It's Thinkorswim. Why am I using Thinkorswim? I don't know. I help build the calculations for expected moves. Like that was my job for the better part of from 2001 all the way to 2015. That's right. That's when I left, 2015. We had the third child, had really good health care there too. We had the third child, and I said, I'm out of here, everybody. And then we launched TheoTrade just a couple of months after that. It was well planned and well timed. This is Thinkorswim, and Thinkorswim has an expected move calculation. Okay, and guess what? On Thinkorswim here, the example down below is Lulu. This is the expected move calculation. It says Lulu was supposed to move right around 14 bucks. Remember that. Remember that, because we're going to talk about Lulu in a little bit. So Lulu was expected. It's Lululemon, right? See-through athletic pants. That's what they're known for. Anyway, they're supposed to move about 14 bucks. But if you don't have Thinkorswim and you don't have this calculation, you could just use the at-the-money straddle as an alternative. Check it out. Okay? Here's Amazon. Now, Amazon is an absolute beast of a stock. We'll come back to Lulu a little bit later. Amazon's a $1,762 stock. The expected move is $34.70. But if you don't have the expected move calculation, you're using like Interactive Brokers, using this platform, that platform, you don't have it, okay? You just add the at-the-money call to the at-the-money put. There it is. Now, look, adding the call to the put is 33.30. The real expected move is 34.70. Now, I know some people are like, I can't handle it. I'm an engineer and the number has to be perfect. Like, listen, there's medication for that. You should probably take it. This is a $1,700 stock, okay? Don't split hairs over what? $1 of differential. That's all I'm getting at, right? So you can find expected move without having this calculation. I want you to know that. Now, okay, we're going to really get into this, all right? Expected move, again, has no directional bias. Expected moves are based purely on volatility. However, recognize the volatility is based on live markets. There are often hundreds of millions of dollars setting the volatility in options. Go back for a second. There are hundreds of millions of dollars, okay, even billions of dollars being traded inside something like Amazon every single day, right? I mean, look, the thing is already trading what? Almost 2.8 million shares, and this screenshot was taken early today. There's heavy liquidity in here. So when you look at these expected moves, you have to realize that the expected move, this is skin in the game. This is not some random calculation. That's the part that people don't get. They don't realize, like, hey, like this $34, okay, there's hundreds of millions of dollars saying $34 is it. Do you believe that? Now, using expected move. Expected move can be a phenomenal resource. But here's where the rubber meets. It's where the meets the road, right? Eventually, you got to take this idea of this, I guess, esoteric idea of expected move. Like, okay, he added the call to the put. But this is where the rubber, okay, of expected move meets the road. Like, how do you use this? Okay. The efficiency of the markets. Trading firms. Here's where we're going to go. And you're about to be Alice tumbling down the rabbit hole, if you will. Okay. This is where it's about to get deep. Everybody, okay? Okay. Breathe, people. Trading firms both buy and sell options. Okay. Trading firms. I don't know. Name some trading firms. Anybody even know trading firms? Because what's funny is you're like, I don't know, TD Ameritrade. TD Ameritrade is not a trading firm. TD Ameritrade is nothing more than a brokerage firm. Okay. Who are some trading firms? Like, really? Who? Anybody? Okay. There's 1,000 people on here right now. Okay. I like it. So SIBO is an exchange. JP Morgan's absolutely a trading firm. Goldman Sachs trading firm. Timber Hill is actually almost completely shut down. So Timber Hill is actually Interactive Brokers, and they're pretty much shut down these days. Fido doesn't really have a trading. That's Fidelity. Don't really have a trading side of it. Okay. CME is an exchange. They are not allowed to trade. So trading firms. One of the biggest ones in Chicago would be Citadel. The other biggest one out there, Virtue. Most people haven't even heard of it. Actually, most people now have heard of Citadel. Why? Because the owner of it went out and bought the most expensive piece of condominium property ever in the world at $250 million. So they have heard of it. But I worked for a decent-sized trading firm. And by the way, the big banks, Bank of America and, Citi, all of them have trading firms internally. But the big ones that you never really hear about are the Citadels and the Virtues. That's some of the bigger ones. But imagine you're a trading firm and you sold 5,000 at-the-money straddles for a $4 credit. Now, this is where if you have no options experience, you're like, I'm lost. Okay. It means you're out there and you sell, okay, a call, okay, and you sell a put. You're selling a call and selling a put. Now, the stock is trading right smack at 100. Which call and put are you trading? Okay. You're selling the 100 call and you're selling the 100 put. You collect for this, what? For both of them. $4. So you sell the call, sell the put. What does it add up to? You collect $4. What do you want the market to do? You tell me what you want the market to do, and you just sold 5,000 of them. You want the market to move no more than how much? Because if you sold the call and the put at the exact same time, right? You want the market, it can move, but it can only move up $4 or down $4. Are you guys with me? Is everybody with me? Because this is one of the most important examples that people just don't get. And they need to get this because this is what drives order flow. This is what drives markets, right? So, and trading firms do this every single day. They sell 5,000 of them easy, all right? I mean, again, I used to sell 10,000 lots in the SPX like they were water, like they were going out of style. So here, okay, we're actually selling it and you have this $4 range. So the market can only move $4 higher, $4 lower. What if the markets move more than $4? What happens to you? Okay, if the market moves more than $4, what do you do? You're like, ah! You know, all of a sudden the market's like up like $10 and you're like, oh, I'm getting sick. You think a trading firm is really going to take that risk? Do you think a trading firm is really going to take that risk? No, not a chance. Okay? You want the market to stay within that $4 range. Remember that. Now, the hedge that holds the markets. So what does the trading firm do if the stock starts to move in and around the edge of the $4 credit they receive for the straddle? They hedge. Okay? So now I'm going to redraw it. I'm going to redraw that one for you because this is like the best example for hedging. So here, again, they have this $4 range. So they can go up $4 or down $4. And it's this $100 stock, right? And then the stock starts to rally and it starts to rally and it starts to rally. And the second we get to here, okay, this is that make or break. This is the break-even point. Algos turn on. Ooh, literally a server will turn on and they'll actually start to buy and sell the stock in real time to hedge the risk of the straddle. So the second that we cross out here, what are they doing? Offset risk, offset risk, offset risk. And that, people, is what we term high frequency trading. High frequency trading is often to trade against other positions. Therefore, if stock moves big and the firm is short the straddle, they do not take large losses as they're hedging with the shares. Are you with me still? Because if you're not with me, like, you know, you gotta give me a heads up over here. So they're hedge. The second we actually break through this level, they actually, like, the server automatically kicks on. It's an auto hedging device. It's really an easy algorithm. This is, you know, hedging 101. Yeah. By the way, I asked everybody, are you with me? And it's kind of quiet. Sometimes a little hamster gets stuck in the wheel. Stock moves big. They don't take large losses. They might take some losses, but they start hedging with shares of stock. Now, you got to remember something. For every buyer, there is a seller. Say it again. For every buyer, there's a seller. Let's not forget that for every buyer, there is a seller. See, there was a firm that sold 5,000 straddles. They had to sell them to someone, right? The firm that sold 5,000 straddles had to sell them to someone. And that someone is likely another huge firm. And they're also using algos to hedge their collective risks. Now we have both a buyer and a seller surrounding the $4 straddle. Two of the firms battling to the death using algos to control risks. And the end result is the underlying stock moving $4 to the relative advantage of absolutely no one. Time out for a second. Okay? You're like, what? Okay, what is going on here? So let's actually just blank the screen for a second. All right, I'm just going to go to a totally white screen for just 1 second so I can actually draw this. So here we go. You have this firm that's out there, okay, and they're in this $100 stock. And this one firm realizes that they want the stock in this $4 range. If it moves outside the $4 range, they're in trouble. Okay, and they sold 5,000 of these positions. So they sold it to somebody. They sold it to a firm that turned around and bought 5,000 of them. So there's a buyer and a seller. Well, guess what happens? Okay, there's one firm that if the stock starts to move higher is actually hedging against it so that the stock should only move $4. There's another firm that bought that straddle that wants us to move more than the $4, and they start hedging in the opposing direction. You know what it does? It's called drawing the line. It'll actually pull the underlying directly to the edge of the expected move. And it is statistically significant. And I can't stress this enough. Okay? So the stock moves, and the most likely move is to the edge of the expected move. To the relative advantage of no one. Well, that is, of course, no one but us retail monkeys. And we found edge, okay, in trading the scraps of all these big gorillas. Let me show you what this comes out to. Summary of why we move to the edge. Okay? Summary of why we move to the edge. And you're going to understand this. Okay? You're going to understand it. By the way, it is not an $8 range. It's a $4 range. Okay? The calls trading for $2. The puts are trading for $2. Add them together. Okay? It's a $4 range higher and a $4 range lower. That the expected move is $4. We'll come to that later. Supply and demand determines the expected move. Okay? Tens of thousands of option contracts are based on the expected move in the days leading up to earnings. The timeout. It's the first time that we've even mentioned earnings. Because the whole theme tonight was really trying to find a definitive edge, a trade in and around earnings. Yeah, everybody's trying to predict what's going to happen during earnings. I looked at the fundamentals. Apple should be good. Lululemon, they're selling lots of see-through pants. Who cares? None of this garbage matters anymore. We don't care. We move to the edge of expected move. And we move to the edge of the expected move time and time and time again. It's about the trade. It's no longer about individual stocks. Nobody cares. How many pants did Lulu sell? It doesn't really matter because they're going to move up or down about $14 because that's what the market says they're going to move, right? Hang on just a second. So trading firms, they're using algos to buy and sell stock to mitigate the directional exposure. If the trading firms have positions in the stock, okay, the exposure is likely neutralized at or near the edge of the expected move. Algos, through the course of hedging, drive the stock to the edges of the expected moves. You're like, uh-oh, don't worry, we're going to show some examples. Gravity, earnings, and expected move. Trade logic structure. Here we go. You ready? In heavy liquidity, okay, equities. That means crap that trades in heavy liquidity. Right? Expected move tends to work like gravity, sucking price to the edge of the expected move shortly after the earnings announcement. So think about this, right? You walk into this stock, and the stock is supposed to move, right, plus or minus $14. The stock is supposed to move $14. Does the stock move $14? We're going to find that out in a second, okay? But if this is the expected move right before the earnings, that is the most likely place we're going to end up after the earnings, okay? There's a great trade. We're seeking statistical edge in trading the morning after a major earnings announcement. The morning after, okay, a major earnings announcement. We have no intention in trading in the after hours. However, in limited occurrences, we may seek to trade in the pre-market. When price is slightly outside the expected move, we will trade either long or short positions, looking for the equity to revert back to expected. What I'm saying is, stock is supposed to move 14. With me? But it doesn't move 14. The stock moves up 16. What's going to happen at the cash open? The stock's going to pull right back to the edge of the expected move. Why? Because at the cash open, the algorithms turn on. What do? They'll actually push the stock right back to the edge, and it'll sit there. Let me show you exactly what it actually looks like and show you in real context. Here we go. Okay, this is an expected move. We call it an EM earnings trade. EM earnings trade, okay? All I did is sketched it out. I sketched it out to begin with just to show you how this kind of works. All right, here's your stock. Stock! I don't care what stock it is. The stock starts the day, right? The stock starts the day at what? Well, let's do it $50. It's a $50 stock, okay? And the stock right here, it ends the trading day. Right there is the end of it. That's the close, okay? We are now at the close. The earnings announcement comes out right after the close, okay? Now the stock was expected to move, what? Up $3 or down $3. Do you know where the stock is going to go? No. You just know it can move up $3 or down $3. In the after hours, the stock shoots up. What does it shoot up? It's up $4. You got the edge right here. What's the edge? As the market, in the cash market opens, okay, we're going to revert right back inside of the expected move and probably just hug the line the rest of the day. Why? That's where hundreds of millions of dollars have traded And that's where the stock is going to revert back to. And this, it's people look like, I got a MACD, I got a Fibonacci, I got me a Bollinger Band. Yeah, if you know about the expected move, all you do is trade for the edge of this. Everybody else is. This is what professional traders do. They find an edge that exists, statistically speaking. It's just a reversion back to expected move. Now, this can happen in a couple of different ways. It doesn't just have to happen like, how do I trade it? You get short over here. But let's say that the stock, after hours, went down. Now the stock is down. Okay, as soon as the market opens, stock's going to revert right back up. Now, you can trade this with stock, but not everybody has money for stock. You can also do this trade with options. You could trade this thing with stocks or options. As soon as the market opens, the options are open. You could actually trade it right back for the reversion back. Now, let's actually get into real examples. Everybody, again, it's a good time to stop and say, are you okay? Right? Because, again, I told you that this is taxing stuff. I know people came tonight and they're like, is this where I learned the red and green flashing arrows? Okay. This is the stuff that you got to learn. You want to make money in this business, you have to actually learn, okay? The business is not about predictability. I'm not telling you there's predictability. I'm looking for reversion back because I know how algorithms are going to drive order flow. And algorithms are going to drive order flow right back to the edge of the expected move because they have hundreds of millions of dollars that says we're going back there. Period. Does it always have to happen that way? No. But we can show you. By the way, somebody's asking a great question here. They're like, is there a probability for the reversion? Absolutely. I'm not going to get to that right now, but absolutely. Man, I ran so many, for those of you that are total geeks, we ran so many p-values on this. We know exactly the probability of reverting back in. We know how far the stock has to be before it reverts back in. We know every aspect about it. That's what we call criteria. What criteria is, it's understanding the trade gets you to first base. For you to make money on it and get home, you got to know how far the stock is capable of moving. Otherwise, it may not revert back. What happens if the stock moves huge? Okay, well, it's not going to revert back. And we actually tell you how to set this thing up. Now, here's a FedEx earnings trade. FedEx. Ready? This is FedEx. By the way, why am I using FedEx? Because this was a reversion trade. This is a trade that actually happened when? Last week. It was a last week trade. I just picked this one out because, not because it was just recent. I picked it because it was easy to comprehend. So this is the first example I'm going to give you. There's actually a multitude of examples. In fact, I'm going to use Lululemon in just a minute. But in this FedEx example, the reason I like the FedEx example, the expected move in this case is $10 and roughly 50 cents, right? You can even add the call to the put, and it comes out to about the same, right? $5 plus almost $6. It's very close, right? It's almost the same as the expected move. So FedEx is expected, you have to put, quotations around there. It's expected to move $10.40 upon the earnings release. Now it's a $180 stock. So what happens? You ready? You ready for this? Okay. Here's FedEx. This is FedEx, and I just want to draw this couple lines on this screen. This is where FedEx effectively closed. Dun, 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 dun. FedEx closed basically at 182. So FedEx had an expected move of $10.46, higher or lower, prior to the earnings. Prior to earnings. I don't know which direction it's going to move. Okay? The closing price of FedEx, okay, was approximately $182. And the stock sold off nearly $14 in after hours. Look where the stock went. The stock went from here, okay, in the after hours. Well, there were points where it was all the way down here. That's the low, okay? So on the rally back inside the expected move. I mean, listen, it's going to rally back inside the expected move. Why? It's close. So at the open of the marketplace, here is our 182. At the open of the marketplace, is, listen, you're not going to be able to get it in the first couple of seconds. It's basically a $170 stock. Listen, if you think you're fast enough to buy it right there at the open, good on you, but you ain't going to get it there. You'd be lucky to get in here at maybe 170. Be realistic, okay? You bought it at 170 when it closed the previous day at 182. So the stock right now is down some $12. What it's supposed to do is revert back up. It's supposed to revert right back up to the edge of the expected move, or even inside the expected move. what does it really do? Okay, it actually rallies up, and it rallies up and pulls right inside the expected move, just like a good stock should do. Okay, just like a good stock should do over here. So again, it's a nice clean example, because this example should resonate because it's the exact same thing as this. It's just what I showed you, right? After hours, we overreact to the downside, then we revert right back up inside the expected move. Here, we overreact in the after hours, revert right back up into the expected move, right? And here's throughout the course of the trading day, the stock went even higher. It's a really easy trade to get in and out of, though. It's a really easy trade. And if you can't trade stock because it's $170 stock at this point, you trade the options. Listen, I'm showing you, you know, what? The first like 10 minutes of trading a day. You're in, you're out. It's fast. It's really fast. And we can actually show you precisely when to get in this thing and when to get out of this thing. Now, ready for another one? Okay. So by the way, you're just taking the trade, you're putting the trade on, and this one could be off 20 minutes later. This trade could have been off 20 minutes later. No question about it. We're not going to sit there and be like, should I hold this thing for a week? No. You're in, you're out, get on with your life. Next, Lululemon. Expected move earnings trade. Now, why did I pick Lululemon? Okay, I'd like to say that this was a trade based on some previous time frame, but this trade it's right this second. Why? Because Lulu, this was the closing price. When? Today. When? Today. Today. This is a trade. It hasn't even happened yet. So the stock closes at 146.80. Okay? The expected move, this is right at the close of the market, is 13.50. Okay. Now I took a screenshot here because I didn't want to go live on a trading application, but I took a screenshot a little bit before this presentation started. Here we go. You ready? Here's Lulu's closing price. Lulu closed at 146.80. It had a $13.55 expected move prior to the market close. After releasing earnings, the stock is up 15.50. Okay, look. There's the stock. Okay, here's effectively where it closed, and there it is now. Where did it close? As I said, 146.80. Do some math. It's now up at 162 and change. You tell me, what's the trade for the morning? What is the trade for the morning? Okay? You know the setup. The setup is exactly what I drew in that example. So think about this for a second. What's the trade for the morning? The trade for the morning is the stock should pull in. Where should it pull into? Well, let's actually pull up a trusted calculator. I don't want to scare anybody here, but I'm going to pull up a calculator. Okay? Where'd my calculator just go? There it is. There's my calculator. So we have the stock that was trading, and again, I'm just going to leave this right over here. We have the stock that was trading for 146.80. Okay? I want you to just add $13.55 to it equals 160. Okay? So the stock, let's freeze the screen really quick. The stock right now is at 162.30. Stock should be right here, okay, in and around the cash open. So, depending upon where the stock is at the cash open, there's edge. There's edge to trade it back to 160. Think about that for a second. Now, I can't get into every single nuance of this tonight. We could go out there and we could trade the stock short. What's the trade for the morning? Let's trade the stock short and let it pull back into 160. Okay? You're like, but it's only $2. I don't care. It's $2 edge that you didn't have otherwise. It's $2 edge that you did not have otherwise. You know what? If you don't have the capital for the stock or you can't short it in your IRA, what do you do? What do you do if you can't short it in your IRA? Well, you go out there and use the puts because you can trade puts inside of your IRA. Okay? There are umpteen different ways to trade this, but you have to know how much is enough, how far is too far. You got to know every nuance, okay, of what we call entrance criteria. This is the trade setup. The trade setup is based on the expected move, okay? But here's what you need to know. This is what you're going to need to know to successfully trade with an edge around the earnings. First of all, you got to know precisely what makes a viable earnings trading candidate. Okay? What's the candidate? How do you select the right candidate? It's everything. Okay? Select the wrong stock, you're going to just run amok. I'm going to tell you, I'm going to give you a little hint here. You need there to be hundreds of millions of dollars trading in that marketplace, because hundreds of millions of dollars are going to have algorithms that are going to drive those stocks right to the edge. Lulu is a prime example. FedEx is a prime example. Okay? I know the expected move is important, but what do you do once you find the expected move? Like, it's like, great. You're like, oh yeah, Don, I found it. I found the expected move. I'm like, okay, what is it? It's plus or minus 13.55, right? Is that big enough for you there? It's plus or minus 13.55. You're like, sweet. What do I do with it? Okay. Then you got to know, how do I set up the trade? What entry points do I use? Do I get long? Do I get short? Can I do this with options? Of course you can. You can do this with calls. You can do this with puts. You can trade it in an IRA. You don't have to have a lot of capital for it. How do I know when to get in and when to get out? How do I size my trade? Okay. What's the right amount of risk for you? This is what boils down to criteria, because that's what we do here at TheoTrade. It's criteria. It's what we do. What's criteria? It's about answering the what ifs. What might be the good candidate? What's the correct options expiration cycle? How much capital do I commit to these positions? When do I execute? Execute means when do I actually click confirm and send? Which strike price options do I buy? And you just go like almost like hyperventilating by the time you're like, oh, what do I do? What do I do? What do I do? We have the answer to all these questions. What we do here at TheoTrade, what I think really differentiates us, we build recipes. It's just definitive criteria. It's just a checklist. You go through step 1, check. Step 2, check. Step 3, check. The first time you go through the checklist, it's going to take you some time. It might take you 20 minutes to go through a checklist the first time. But like anything, the first time you go through it, it takes time. Before you know it, it'll take you 20 seconds to go through the checklist because you've been through it before. It's the same thing as going out and trying to bake a cake. You bake a cake the first time, you're like referencing the recipe every minute. You're like, what? How many eggs? You're like, eggs? I don't even know if I'm supposed to put an egg in it, right? This is what you're trying to figure out. This is what trading is really about. It's about checklists. It's about unique variables. You have to actually answer the variables. What are the variables? It's the how, the when, the why, at what price. But it's just literally, it's the beginning of the variables you're going to face when you trade around expected moves and earnings. Okay. The secret of this, it is in the sauce. Okay. You can read about these strategies anywhere. You can read about expected move to your blue in the face. Expected move is nothing new. I actually have a relative that traded on the floor all the way back to the 1970s. He predated options. Okay. On the floor. He actually traded originally at the Board of Trade, and then when they opened up the options pits, he went to the option pits. He told me in the late 70s they were already using expected moves. It's nothing new. But it's not going to tell you, okay, how to execute this stuff, because we spent years fine-tuning this trade setup. We spent years building the steps to get into the trade. Okay? It's all about the corresponding criteria. It's all about the checklist. Here's how you can trade earnings with a formula. We have an entire course designed expressly for this. This is actually some of the curriculum for that course. And I'm going to take you through a little bit of the curriculum, so bear with me for a second, because we'll show you how to find the edge and how to exploit it around earnings announcements. Okay? How and why expected moves around earnings can create opportunities, and it's really consistent. You're constantly, during earnings period, by the way, the reason we're hosting this is because earnings is coming up. I mean, yeah, Lulu was tonight, but the banks start releasing. We're a week away from full swing earnings. How to find exceptional intraday setups. How the market provides what we term predictable or manipulated ranges. That's expected move. Okay? How expected moves and option pricing, it can assist you in entering profitable trading opportunities. We're going to give you the precise step-by-step criteria. We'll walk you through entry and exit. So you're going to know exactly what to do. How to minimize risk. Okay, how to generate returns, trading stocks or options in here. What stocks are going to make the best candidates? Which strike prices to select? What expiration periods? When to open? When's the best time to close? To create the right risk reward. This is actually one of the most critical portions of this class. What's the best times and the setups for entering and exiting? Timing is important over here. Okay, it all comes down to timing, to the right risk reward, to knowing how to enter and exit this. The class, it's trading earnings formula. I am the trade instructor. It's a 3-hour class. It's available immediately. This class, it's what we term, it's ready to go. It's on demand. So the class slide deck, that includes the entry and exit criteria, which is the checklist, it's available right now immediately for download. The class can be downloaded and reviewed on TheoTrade mobile for both iOS and Android. Everything is ready for you for this class. It's ready to go. The class also qualifies you for our reduced commission rate. We have reduced commission rates. I will mention that here in just a minute. Several now large brokerage firms have come aboard and will give you a reduced commission rate for having attended, of course, Theo Trade and some of our courses over here. So all of this class, it's ready. It's ready to go. Classes like this take a tremendous amount of time to put together. They take a tremendous amount of editing. So this particular class that we actually have what we term in the can, it's on demand, the checklist, the criteria, it's ready to go. Now, when people look at this for the first time, they kind of think to themselves, whoa, been there, done that. I think a lot of people that tune in, okay, they've been through the gauntlet. And tell me, please, you've been through the gauntlet of paid classes. You've been through the gauntlet of paid indicators, secret squirrel black boxes, red and green flashing arrows. And everybody seems to find, only to find, just buy this one last thing. It can make all the difference. But wait, there's more. And here at Theo Trade, we take a very different stance. We've just had enough of educational, what we call garbage, sales pitches. We're trying to put an end to it. We're trying to literally disrupt financial education. Listen, everybody here at Theo Trade, professional traders. Everybody's got a minimum of 15 years of trading experience. We never hired any professional salespeople whatsoever. Okay? In fact, I worked in the brokerage industry, okay, for 15 years. You know something about the brokerage industry? Can't sell anything. Okay? I worked for a retail brokerage firm. I ran education. What did I do running education? I traded and I educated. Didn't sell anything. Okay? Educating you here at Theo Trade, though, is our only goal, and we're going to demonstrate it. Today, we're going to forever change the way that you view education. We're introducing what is termed TotalTheo Unlimited Streaming. Okay? What is it? What is TotalTheo Unlimited Streaming? Okay? First, it begins with access to over 81 trading classes. Now, all 81 classes are available immediately. They're on demand and on Theo Trade mobile application. This would include, again, this includes, okay, right here, the Trading Earnings Formula Workshop. So this is 81 classes that is currently waiting for you. Now, again, it includes, right, the Trading Earnings Formula Workshop. It's a $300 class. By the way, it also includes in-out spreads, high probability spreads, iron condors, selling premium, minimize your risk, survive and thrive in extreme volatility, okay? Day trading NASDAQ futures class, covered calls, the next big short. This is risk twist spreads. That one's huge. Every one of these classes is $200, $150, $100, $100. Essential skills. By the way, I picked a handful. Top 10 skills for growing a small account. Pairs trading, the final frontier, another $200 class. And there's a ton more. Listen, there's 81 classes waiting for you. We have built the Netflix of education. And we're adding new classes every single month. It's access to over $5,000 worth, okay, in just classes alone. But don't stop there. I mean, when people ask, like, what is TotalTheo streaming? Well, you have access to 81 classes. Next, you have access, okay, to what? 59 proprietary indicators and scans. Auto expected move. How about this? We'll find the expected move in any underlying for you immediately. You don't even have to reference the option change. Just look at the charts. Auto expected move. We have S&P 500 gravity points. We have the Theo Trade RSI Laguerre. It's a Laguerre polynomial. We have Quantix, which is cumulative tick indicator. You know this Quantix alone, okay? I've actually seen a couple of other firms rip it off. They sell it for $1,000. NQ levels, next generation squeeze indicator. There are squeeze indicators out there, okay? $500-$600 a piece. We have a complex position tracker. We have IV rank versus percentile. Theo trade, this is a Theo quant trade setup. Unusual options activity, okay? A sizzle scan, SPS expected move. This is just like the tip of the iceberg. I just wanted to run through a couple of these, okay? We don't sell these. This is part of TotalTheo Unlimited. It's part of it. Access to, it's another $1,800 plus in indicators and scans. It's part of TotalTheo, okay? On top of that, We have coaching. We have live trades. And we have emailed trading ideas. We have a live trading chat room. We're broadcasting, okay, live 6 hours a day. You're like, wait. Yeah, that's part of it. When I say it's part of it, okay, that is part of TotalTheo. Traders are providing real trade ideas. They're actually interacting with you, okay? Literally, they're talking to you, right, in a chat room. But they're streaming their charts, their trades. We're also emailing trade ideas. We have 4 distinct trading portfolios. We have daily coaching sessions with timely topics. Everything is archived. Everything is available 24/7. And instructors will also directly answer your trading questions. So you have a coach. You don't have to pay like an additional, there's coaching services out there. What are they? They're $2,000 a month just for coaching services. You have access to another $2,000 plus of support, trades, and insight. Okay? It's all part of TotalTheo. It's all part of TotalTheo. It is $8,800 in classes, in live trading, in coaching sessions, in proprietary tools. Again, it includes the earnings formula workshop, 81 additional classes, new monthly classes, live trading chat room. Again, we're broadcasting 6 hours a day. Everything is archived 24/7. You can even download it off of mobile. We'll email out trade ideas, trading indicators and scans, coaching sessions, email support. It's all part of it. And tonight, we're not doing it for $8,800. Okay? It is totally worth it. I mean, listen, there was a course that we put together at TD Ameritrade. There was an education division of TD Ameritrade. A course that was way, okay, just a huge amount of information that we built over there. Pales in comparison to what we have here at Theo Trade. That course at TD Ameritrade, okay, they were charging $24,000 for it. Okay, here tonight, the entire thing is $297. It's theotrade.com/TTS. It's theotrade.com/TTS. It's TotalTheo Unlimited Streaming. It's $297. A question that inevitably comes up in here. Okay? Well, $297 for what? For access to 81 classes, monthly classes, everything on here. It's 3 months. Okay? We have found over time that you need a little bit of time on here. You need some time because there's that much. And I'm actually going to show you, okay, a little around Theo Trade here momentarily. But you need some time to actually explore this. And more importantly, tonight, we'll worry about some of the other classes in a minute. But tonight, we're talking about trading earnings formula, right? And in this particular workshop, it's about earnings. We need to take you through earnings trades and earnings trades. If you want to get good at it, I think you need 3 months. You need 3 months. You don't have to tune in every day. You tune into an archive here, an archive there. Okay? It's at your leisure. But I think you need that support for a period of time to get good at this. Oh, yeah. And in addition to the earnings formula workshop, listen, there's a lot of people, they'll charge you $297 to attend one stinking 3-hour class. You get 81 classes. I'm going to tell you, there is nothing like this. I'm telling you, okay? TD Ameritrade, $24,000 for 18 months of courses. It didn't even hold a candle to what we're doing here at Theo Trade, and we're doing it for $297. We're doing this because, listen, we have 3,500 clients now that are on TotalTheo Unlimited Streaming. And we're constantly adding more instructors to help answer questions. We're constantly adding more classes. We are literally building the Netflix, okay, of trading education. And here's a little bit about what our members are kind of saying. And then I'm going to take you into then I'm actually going to take you into Theo Trade. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together, sharing knowledge, and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one. From David. This one, it's one of my favorite. From Theo Trade chat room. It's so amazing what we learn when we listen. Thanks to my ex-wife for this quote. Don is a wonderful teacher. I've really enjoyed listening and learning from him the last few months. I love how Don goes about explaining and showing how to go through the different mechanics. Okay? Again, this is theotrade.com/TTS. So come back. I'm going to show you the site in just a second. TheoTrade is the best service out there. Okay? If there's anyone interested in trading, I always tell them about TheoTrade. You guys are the absolute best. It's just how I feel about it. I've learned so much from you guys. Thanks for all you do. With that, let me show you a little bit about the site. Okay? And I'm also going to take you into this. It's TheoTrade. Again, this is the subscription. It's $297. Okay? And again, it is easily, we put this value of $8,800 on it. Like I said, we put our heart and soul into every single class that we do. It is well worth more than $8,000 and worth more than $10,000. And we do this, okay, because again, we want people involved in trading. And that's what we do here at TheoTrade. And this includes, again, the earnings trading formula class. It's everything I talked about, right? And it gives you access for 3 full months now. Because it's what you need to be kind of like massaged through some of this learning curve. That's what you need. Let me show you a little bit about TheoTrade. First of all, this is TheoTrade. This is actually the site. And if you've never been to the site before, which a lot of you haven't, this is a live chat going on literally right now. So I don't want to scare anybody, but when I say it's a live chat, this is something that's literally going on like right now. And we can kind of fast forward. This is a DVR, so I'm gonna pause it really quick. This is actually the chat room. This is actually the Wednesday evening. We call it the TheoTrade Happy Hour. Okay, so that's a little bit about what the live chat room looks like. Next, we have Start Here. Somebody might be brand new. Inevitably, somebody is brand new. Like, I don't even know where to start. Okay, Options 101, Options 201, Options 301, Order Execution, getting your risks under wraps, what products to watch and why. Okay, if you're curious about these, start here. If you're an absolute newbie, start here. We have TheoTrade tutorials that actually are Thinkorswim tutorials. Okay, we have 4 different individual portfolios. What are portfolios? Well, they're portfolios. You can actually track the trades, trade along with us. Okay, then we come into archives. These are the TheoTrade classes. It's the archive. It's the classes. There's 81 classes in here: day trading classes, technical analysis, futures classes, stocks classes, hedging strategies, trend trading. Okay, mindset. You got to get your mind right for this. And my favorite, option strategies. I'm the option geek here. Jeff Bierman is the technical analysis geek. Sell premium, manage risk. People, you have access to every single one of these. The best part of TheoTrade, and one thing I didn't even mention, everything on TheoTrade is searchable. Like, you could just go through and search. Okay. By the way, there's even a walkthrough to show you how to use the site. But you can search the site. You can type in like, I want to know everything there is to know about probability, and hit search. Everything there is to know about probability. Okay? Setting up low probability iron condor, high probability returns. It just goes on and on and on and on. There's a tremendous amount, again, on this site. Now, I promised I would answer a couple of questions, and I'm going to do just that. Again, I want to throw the address in here. I want to throw the web address in here. And I want to reiterate, it is theotrade.com/TTS. It's tonight. It's $297. Now, let me go through a couple of this. All right, so the first question that came in, by the way, we have a lot of people that are supporting us tonight, that are answering some of the questions in the chat room, and hopefully we get to each and every one of you, because we have a ton of people on tonight. I mean, literally, we have a ton of people on tonight, but let's see if we can get to it. The first question that actually came in is probably the most pertinent. Is this a subscription for $297? Okay. The answer is yes. It's a subscription for $297. Okay. It is for 3 months. At the end of 3 months, okay, we will actually send you like, hey, you want to do it again? Okay. We want you to be part of TheoTrade, okay, for a lifetime. I mean, we put this together so that you would be. Again, we're building like the Netflix for traders. So it's $297. Again, it's an all access pass. I don't want you guys to think there's like, what am I missing here? Do I have to buy this indicator? It's all part of it. Do I have to buy more coaching? No, it's all part of it. We give you that support. We give you the coaching. Okay. It's all part of it. All right. Next question that came in. I like this one. I can't get approved for options because I'm brand new trading options. We can help you get approved for options. By the way, we've got a deal through a couple of the brokerage firms. In fact, I'll actually show you some of the brokerage firms because it's on this page right here. Discounted rate at TD Ameritrade, E-Trade, and Tastyworks. So we have discounted rates at all 3 brokerage firms. So again, if you don't have an account at those firms, we will give you a link. We can give you a link. Tell us where you're thinking of opening an account. But if you already have an account at TD Ameritrade and you want a discount on trading options, sign up for Theo Trade tonight and we'll get you the discount. Okay, we can only tell you what that discount is in the chat room. We cannot mention it live on air. That is part of our agreement with them because the discount is a really, really good one. Can I trade all of these strategies in my IRA? The answer is absolutely. We can trade all these strategies inside of the IRA. In fact, on a day-to-day basis here at Theo Trade, I use my IRA. Okay, somebody was actually saying, you guys do, we literally broadcast for 6 hours a day and we do classes on the weekends. Okay. But if you can't attend live, you can get this stuff recorded 24/7. By the way, when we do a class, we post the archives instantly. Like the class is done, the archive is up. Class is done. Okay. The archive is up. By the way, apparently they're here to help you too. Stacy is here to help you. If you have questions, okay, we can talk. We can talk to Stacy. Anyway, that is available to you. So absolutely. Okay. We're not only here to help you, but the classes, they're archived. And the archived classes also are put into our mobile application. Okay. Our mobile application. We have a mobile application for Theo Trade. You can go to the App Store. Okay. You have to be a client of Theo Trade first. Then you go to the App Store. Okay. Put in the username and password and you'll be granted access. And it's archived. It's everything. It's what we need to go through in terms of every single class is in there. It's great. It's phenomenal. And we built an app for it. Okay. Continuing on over here. Oh, I like this one. Again, I can't get my head wrapped around options. Am I going to be able to follow along in the class? Well, you know what? I think you absolutely will be able to follow along. And actually, I think you're speaking specifically, again, this is about the trading earnings formula class, but yeah, and we have the start here menu. So if something is a little bit like deep for you, first of all, you can email us. And by the way, support@TheoTrade.com. Support@TheoTrade.com. Email me anytime. Like, I literally answer emails. People are shocked. They go, Don, is that really you? Whatever. I can answer 100 emails a day. Okay. Again, 3 or 4 sentences to each of you. No problem whatsoever. We copy and paste trades right into the emails. We use a common inbox. Support@TheoTrade.com. Listen, we have 3,500 plus clients now. Okay. We have 7 full-time instructors. We also have several people that are fully versed in trading, helping us answer a couple of the emails. We got you. Okay. We got you. No problem. Which is actually, I love that. Can I reach any of the other instructors? Of course. Just, hey, if you want to reach Tony, just go to Theo Trade. Again, go to support@TheoTrade.com. Say, I want to talk to Tony. I want to talk to Corey. I want to talk, to Brandon. We're all available. Okay. All 81 courses are available in here as well. How much time does it take to learn to trade around earnings? You know what? This is a class. And then after going through the class, okay, we'll actually teach you to even go through and kind of synthetically trade this the first couple of times. There was another question. Somebody came in here like, hey, do you guys do much around charts? Listen, we have Jeff Bierman, who helped build the Thinkorswim charts here. We have Corey Rosenblum, okay, which is a CMT. We have Brandon, who's also a CMT. The funny thing is there's only a few thousand CMTs in this entire industry, okay? That's basically a chartered market technician. It's impossibly difficult to get that exam. We have 3 CMTs here on the crew. We literally have 3 CMTs. Brandon, okay, Chapman, Jeff Bierman, and Corey Rosenblum all have their CMT. Okay, there's no other firms out there in education that have 3 CMTs. There's not one that has 3 CMTs. Not even, there's education firms that have 500 people working for them. They don't have 3 of them in there. Okay. So if this is the first couple of trades, we'll actually teach you how to walk through some of those. And again, those about technicals, more than covered. Okay. We will walk you through every aspect of getting in and out of these trades. And hey, listen, okay, 81 classes, you spend a lot of time in this site. I think you guys are going to absolutely love it. With that, again, I want to thank everybody for joining us tonight. This web address, again, is theotrade.com/TTS. I will talk specifically tomorrow morning. In fact, tomorrow morning, we are going to start at 8:22 on the button, 8:22 Central Time. That is 8 minutes prior to the cash open. We're going to start tomorrow morning talking about the Lululemon trade. Actually, it's the first thing I'm going to bring up. If you need to get a hold of me after tonight, just go, again, to support@TheoTrade.com. Support@TheoTrade.com. I'll reiterate that. It is right up here, support@TheoTrade.com. You can reach us on the phone number, but it's TheoTrade.com/TTS. What does it mean? TotalTheo, okay, streaming. TotalTheo, streaming. So think of it TTS, TotalTheo streaming. Thanks, everybody. Have a wonderful evening. Bye-bye.